Today. Now, Chewy giving up earlier gains today. The stock had rallied in pre-market trading after an SEC filing revealed meme stock trader known as Roaring Kitty had taken a stake. Rupesh Parikh of Oppenheimer is here to discuss the company and the stock's prospects. Rupesh, great to have you here. Now, the stock has held on to some of the gains that seemed to be accumulating when there was speculation about this stake right here. But the company itself has been trying to, kind of prove it has a durable growth story. How are you thinking about the valuation right now and what the company has to do to kind of, justify it?
Yeah, so I think valuation right here in the mid-20s, it's very fairly valued. So prior to some of the speculation out there on Roaring Kitty, the stock was trading in the low 20s. So as we look at the outlook for Chewy, we think it's very mixed. So if you look at the pet food industry right now, you're still seeing a difficult discretionary backdrop. So given that you haven't really had the household adoptions in pet in recent years following the pandemic, you've seen some challenges in those hard good categories. So I think discretionary is still a headwind for Chewy. And then for the pet food industry, historically, food inflation is a big part of the growth. And right now, you've actually seeing no inflation out there in pet food, or actually even deflation in the latest reading. So I think those are really two of the bigger headwinds out there: challenges in discretionary, and then really the lack of inflation within the category.
And Rupesh, has Chewy sort of proven the business model at this point beyond just the cyclical pricing issues?
Yeah, they have. So if you look at their profitability, gross margins are now in the high 20s. They have an EBITDA margin of 4% plus, and they think they can get to 10% plus over time. I think where Chewy is really differentiated out there is really on the healthcare side. So they've done a great job with their pharmaceutical business. And, now they've opened up these clinics in select markets. I was actually able to visit one in April in Florida at their grand opening. And I think they've done a great job with their clinic business. So I think that could hold potential longer term. So this is a great business model. I think it's really just lapping the pandemic headwinds with the pull forward and all the pet household adoptions and really the lack of inflation out there. I think, if I look at Chewy over the next few years, eventually I think they will get closer to a high single digits, top line algorithm. But right now you're more in that low to mid single digit. And that's one of the key reasons why we're sidelined with the name.
I know the company's done some buybacks, but somewhat offset by new share issuance. I guess the question is, in terms of really getting to sustainable free cash flow, are they close?
Yeah, they're already there. Yeah, I mean, they already generate positive free cash flow. They announced that 500 million share buyback program on top of what they bought from BC Partners. So yeah, they generate a lot of cash. They're very profitable. It really is getting back to that top line algorithm that they laid out their analyst day in December. I think that's what the market's waiting for. And the other challenge is just driving positive net adds and customers. And they've been losing customers in recent quarters, so the market is looking for them to get back to positive net adds.